Hey everybody, welcome to the Animal Donut channel. My name is Jeff Luke. I'm a professional photographer and I'm the author of Stock Market Intelligence. And today I am going to teach you the investing superpower which will protect you from the potential crushing forces of the stock market, which has no mercy for investors who invest their hard-earned money in unprofitable companies. Yes, I'm going to show you how to read an income statement, a financial statement, which is going to help you figure out if a company can actually make money. So let's go. Okay, so the first company we're going to look at is Airbnb. And you probably know all about Airbnb. And so I'm not going to go into the details of what the company does, but I will say one incredible thing I just realized about the company, and that is that its market cap is more than $100 billion. In fact, the other day it was $105 billion, and I just checked today is February 15th, 2022, and the market cap is $114 billion. So it's just gone up about $10 billion in a day. And what's particularly interesting about Airbnb is the company is not profitable yet. And I want to help you take a look at something called the financial statement for the company, and this, you can find it on any publicly traded company's website. And when you look at the financial statement, there's something called the income statement. And so let's take a look at that right now, and you're going to be able to see for yourself why Airbnb is unprofitable. So if we look here at the left side, you'll see these blue bars. That represents revenue. That's the money that a company takes in. But when you see these red bars that go down, those represent the net income. That's another way of saying the profits. So when a company is operating in a profitable way, those lines should actually be above zero, indicating that after a company gets all of its revenues from sales, it pays all of its expenses, and then what's left over is its profit or its net income. But Airbnb is losing money for a number of reasons that we're all aware of. People have not been traveling as much, and when they don't travel, they're not staying in apartments and houses and all these other things that are offered by Airbnb. So this company has been losing money. And if you go and look over on the right side of this statement, you will see under revenue, the numbers are positive. But when you take a look at the operating income, which is another way of saying the profits, they're all negative. Both the lines for the operating income and the net income, and then also the EPS numbers. EPS stands for earnings per share. Those numbers are all negative. So I just want to help you to understand when you're looking at a company and you're thinking about investing in it, always take a look at the financial statements and look at the income statement and see whether you see positive numbers for income, meaning the company's actually profitable. But if you see negative numbers, be aware that the company is not yet making money. And I personally am very wary of companies no matter how much I like them, if they haven't yet gotten to the point in their life cycle where they're making a profit, where they're actually earning their keep, they're bringing in a whole bunch of money, they're paying some of it in expenses and all these costs that you have to endure in order to run a business, but then they're keeping something, because whatever they keep, they can then distribute and share either, as dividends to the shareholders, or they can reinvest it and grow the company. It's a little bit worrying investing in a company that has not yet proven that it's viable. So Airbnb, I think it's an iconic brand. I really like what they do. I've stayed at several Airbnb places and they've been great, but as an investor in the company, they haven't yet proven that they can operate at a profit. So let's take a look at another company. Let's look at Fiverr. Now, some of you may be aware of what Fiverr does. It's a big part of the gig economy. Anyone who's a freelancer, whether you're a writer or an editor, or maybe you retouch photos, or you could be a video editor, could be a graphic designer. You can offer your services to the world at large, and anybody who needs somebody to do this kind of work can hire them by purchasing their gig. So Fiverr is a platform, and they provide a way that people who sell things can connect with people who buy things, usually services, mostly creative services in one way or the other. And I think it's a very useful platform. I use it a lot in my own work. But if we take a look at the financial statements, we'll see here over on the left side, the summary of the revenue is the blue lines. Those blue bars have been increasing from 2018 to 2019 to 2020, but the net income, the red lines are all below zero, which suggests that after paying all of their expenses and their costs, the company is still losing money. And if you go on over to the right side here, you'll see under operating income, all of those numbers are negative. Under net income, all of the totals are negative, and then under earnings per share, all the totals there are also negative. And this is one reason that Fiverr's stock, I believe, has gotten crushed over the last year, is that, you know, people were using the services a lot on Fiverr during the pandemic, but now that the pandemic has slowed down a bit and people are returning to work and leaving home a little bit more, I think that what we're seeing is that the company is, even though their revenues are still pretty high, it seems like they still have not found a way to operate profitably yet. And in any case, the stock has been absolutely hammered over the past year. So that's the second stock. Let's look at our third stock. And this is Rivian. Now, I don't know if you've heard of Rivian, but they make electric vehicles. Their truck is the one that I've heard about and read about. And I think they're going up and competing against Tesla and other electric vehicle manufacturers. What strikes me is it was a big deal in 2021 when they had their IPO. And since then, the stock has just gotten hammered. And if you wonder, well, why has it been hit so hard? Just take a look at the financial statement. And over on the left side, under the summary, you can see under 2019, the bar is red. It's slightly below the zero. And then in 2020, the company lost even more money. And then when you look over to the right side, you can see here under the operating income, net income, and all the other earnings per share numbers that they're negative. So, you know, clearly Rivian is at the place in its life where the company is manufacturing vehicles, but it's not doing so profitably, and it's not selling them at an overall profit. Could things turn around? Of course. And Rivian could become a very successful company 5 or 10 years down the line, but Rivian could also not exist in 10 years, and nobody really knows. And I think this is one of the reasons that during stock market volatility and a lot of uncertainty in markets lately, Rivian's stock price has just been hammered. The stock price going down doesn't mean that the company's suffering. It simply means that investors have lost some of the confidence that they had maybe last year. So let's take a look at another company, the Very Good Food Company. Now, this is a company that I would never have heard about if it were not for checking out some videos on other YouTube channels, and I'm frankly just sort of surprised that this stock has been interesting to any investors and why it's even gotten any interest. But I have heard it mentioned on a number of channels, and if you look here at the summary, the revenues for this company are very low, but the net income, the losses are huge. They were big in 2019 and they are just staggering in 2020. So whatever's going on at this company, the trend is not one that looks favorable. When you look over to the right side of the income statement, you can see the revenue number. While it's slightly positive, the operating income is massively negative. And the net income is also negative, and all of the other earnings per share all have negative numbers. So to invest in a company like the Very Good Food Company, you would have to be hoping that the future looked a lot brighter for the company than its current reality. And that takes a lot of faith or hope or belief that brighter skies are in this company's future. But the point is not so much to make a call positive or negative about this particular stock or the company, but just to take a look and see what the financial statements, specifically the net income of a unprofitable company looks like. And so for the fifth and final company, we are going to look at Warby Parker. Now, if you haven't heard of Warby Parker, they actually made these eyeglasses. They're a website. They sell eyeglasses to people. All you need is a prescription from your optometrist. You send it in and you pick frames, and they'll actually send frames to you to try on and figure out which ones look best. And once you decide on the style, then they can put the prescription into them and send them to you. So people like that convenience, and they like the fact they can try them on from home. And Warby Parker offers stores. They have stores in different cities, so you can actually walk in and try the glasses on. I am a fan of the company. I like the stores, and obviously I got some glasses for my own self, but when you look at their financial statement and checking out the summary here on the left, you can see their revenues look solid. It's about $400 million in 2019. It was just shy of that. And then in 2020, it looks like they had 393 million in revenues, but the net income both years is negative. It's about $55 million negative in 2020, and then they lost $115.9 million in the trailing 12 months. So Warby Parker is still burning money in order to stay alive. These kind of situations can't go on forever. At some point, the money would run out. So Warby Parker has to turn things around somehow by either increasing their revenues or decreasing their expenses. And that could happen in the future. But we really don't know as investors if it will happen and how long it will take to happen. You know, meaning, can the company become profitable before it runs out of money? So this is something that I just want all of you viewers to know about. I find that a lot of people are buying stocks or, quote, investing in stocks, but they don't understand what's underneath the stock. And what's underpinning the stock is a real business. And the business, if it's unprofitable, is actually losing money. And unless it turns things around sometime in the near future, companies can't go on forever losing money. So this video, we've just been focusing on unprofitable companies. And in one of the upcoming videos, we're just going to talk about 5 companies that are actually profitable, and we'll look at the financial statements for them. In any case, hope this has been useful for you. And you know, I'm just trying to provide information here and ideas that help you to improve as an investor. This is stuff that I've figured out over years of trial and error and reading and learning as much as I could, but it took a long time to figure it out, and I kind of wished people had pointed me in the right direction. These financial statements I've been talking about, every company has a website with an investor relations website section, and you can go there and download these annual reports or quarterly reports, or you can just Google for whatever you want and just type in the company name or ticker symbol and quarterly report, and you will get all of this information. It will show you what the revenues are, and it will show you what the net income, which is another way of saying profit, is for that company. So I hope this has been useful. I'm so glad that you stopped by and watched this video, and stay tuned. I will see you in the next video.